That. Vivek, hi, good morning and good speaking with you as always. The first half of the year has been good for the company. It's been a 10% revenue growth and now you're sitting at about a base of 4,300 crores of revenues. How much do you think you can build on to this in the second half of the year?
I think, good morning. As you clearly mentioned, I think the first half of the year has been good for us. And what's been particularly comforting is that we are seeing very good volume growth, which augurs well for the future health of the business. Our innovations are working quite well, and we are also making very good progress in our distribution initiatives. Our hope still remains that the second half of the year will be better than the first half of the year. We are readying a series of new and exciting launches, which should further spur growth. And our distribution initiatives are also yielding a lot of fruit, but a lot of it will depend on the macroeconomic situation. If the economy improves in the second half of the year, that will further drive consumer demand, and net-net the second half of the year should be better than the first half. We are seeing a gradual uptick in urban demand, though we are seeing some near-term challenges as far as rural demand is concerned.
Morning, Vivek. Yes, the company has got a thumbs up from the markets for sure. It's a 3% uptick on your stock. But give us a little more color about both urban and rural demand. What is, first of all, the percentage of contribution from both these sectors for you, and how bad was rural?
So for us, about 70% of our business comes from urban and 30% comes from rural. So we are more urban skewed than the rest of the industry. For the industry as a whole, about 65% is urban, 35% is rural. So in that sense, we are sitting on a low rural base, which gives us a lot more headroom for future growth. Typically in the past, a rural business has grown somewhere between 1.5 to 2 times the urban growth. Last quarter, rural growth was about 1.2 times the urban growth. Some of it was due to a sharper pickup in urban, but rural certainly has been impacted because of higher inflation in rural as well as a deficient monsoon.
Okay. You did mention a while back that you have some new and exciting launches that will spur growth in the second half of the year. Can you line up what they are?
I think we are looking at launches all across our 3 categories. What we've done in this quarter is we have launched a very innovative coconut henna-based hair coloring cream under the brand Nupur. We have a new health and wellness platform called Protect. We had done a pilot launch last year. We are now scaling this up across general trade pan-India. We also had launched a premium hairstyling brand called Bee Plant with hairstyling products for the Indian consumer at a more premium price point. We are now rolling this out on a pan-national basis. Beyond that, we do have some other launches planned in air fresheners, in home insecticides, in soaps, and in hair colors. The exact number of launches will depend on the economic environment, but we are readying ourselves to actually have a slew of new products that we can take to our consumers.
Okay. Actually, in terms of contribution to your top line, I guess household insecticides and soaps would take the lion's share. Are you, in course of time, expecting hair color to be significantly higher? Or the entire range of hair products?
I think both insecticides and hair colors will grow faster than soaps, because soaps is a much more penetrated category. In terms of profitability also, home insecticides and hair colors are more profitable category. So along with the sales mix getting skewed more towards these categories, even the profit contribution will actually get higher because of this higher salience from these categories.
What does digital mean to you, Vivek? Is it an asset? Is it a pain? What is its contribution, plus or minus?
For us, digital for us is not about actually digital marketing, but more about marketing in a digital world. So it is a very important part of the marketing mix. But what we are doing is we are integrating digital along with the rest of our marketing strategy. So we are not keeping it standalone, but thinking about this in a much more omni-channel fashion. And we are also allocating a lot of money towards digital media. This year, expect about 10% of our advertising budget to be on digital.
Okay, that's keeping with the times. Well, one internal that the market has really liked about your numbers is the way your margins have expanded 150 basis points year on year. I want to understand how much of this is courtesy lower raw material prices and how much is courtesy improved efficiencies. And do you think you could beat this 18% level in the second half?
Clearly, as I think you've pointed out, we have benefited from soft raw material prices. I think about 2% of the improvement that we have seen in our gross margins has been the result of the benefits of lower commodity prices. But what's equally important is that almost 1/3 of this improvement has come from better efficiencies and a better sales mix. And so, as you pointed out, if insecticides and hair colors grows faster in the second half of the year, that will actually also help improve our gross margins further. So I'm hoping that, we can build on this. And also in the second half of the year, if you compare the costs, while some of these costs might be bottoming out, the base is still much lower. So in that sense, the second half of the year should allow us to see improved gross margins as well. The exact quantum we'll have to wait and watch.
Your raw material costs are down about 8% this quarter to 800 odd crores. Can it get better? I mean, can it fall even more?
I think it's difficult to say. My guess is it'll be difficult for raw material prices to fall below this because we are seeing some bottoming up of these raw material prices. Depends a little bit on what happens to crude because almost 40% of our costs are in some ways dependent or linked to crude oil prices, packaging, transportation, etc. So we are hoping to continue improving gross margins, but maybe difficult to beat the kind of prices we've seen in this quarter.
Okay, one final question from my end then. Your soaps business has seen a subdued 3% growth in revenues. One would have thought with the return of Synthol, you would have seen perhaps a higher soaps volume growth, but that hasn't played out. Do you think the market has outgrown Synthol?
No, I think Synthol has been doing very well for us, and so we continue to be very optimistic about the kind of progress and plans we have for Synthol. Our overall volume growth for soaps in this quarter was about 5%, which I think is very good. Historically, if you go back and look at the last 10 years, for the entire category as a whole, soap volume growth tends to be around 2 to 3%. So versus the industry, again, our volume growth has been very strong. I think clearly there is some price deflation that's been going on in the market, which is why reported value growth has been a little bit on the lower side, but volume growth still looks to be very strong, and it's been driven largely by Synthol.
All right, we'll leave it at that since you're so strong on Synthol. Thank you very much for joining us, Vivek Gambhir, with your thoughts. But eventually, of course, soaps will be a lesser and lesser proportion of the company's profit itself. It will go to the more high-margin, high-value-added products. The Godrej getting a big thumbs up from the markets and